I am still very excited about yesterday's NIO earnings. They really crushed it, but what did the stock price do? It crashed. So I hope you kept your cool. I hope you learned the lesson that you cannot get always what you want. Sometimes the stock markets behave differently. So in this weekly special, I'm going to talk more about the macro picture, about a broader and bigger picture, and talk about how Tesla and NIO are doing in regard to that, and also a couple of more stock news on that in the broader macro picture around here. So please smash the like button and then quickly dive into why NIO has actually tanked, and also Tesla is not doing well since the earnings, and actually both of those companies have had really good Q2 earnings. So it's really a surprise that if we look at the charts here, Tesla is down 20% after their earnings, roughly 17.46% to be precise. And NIO, if we measure from the spike yesterday to where they are closing, they have been roughly down 15%. So that really comes to a surprise if you look at how good those earnings have been. And then if you're looking at this screenshot, this really tells you what is going on here in the market. And I'm not blaming Volkswagen for it, but it's really a stark contrast between what is happening with Volkswagen, NIO and Tesla here. And this is actually about what is going on in the markets in general. So what we have to do here to understand this is to look at the broader picture about what has happened in the stock market with the Roni crisis. So after the lows actually of mid-March, we've seen that the tech stock in the Nasdaq 100 index have been actually taking the lead. So those tech stocks have been leading on the forefront of actually making the gains in this recovery. So most investors were jumping to tech stocks like Facebook or like Microsoft and Apple and stuff like that. And in contrast to that, the S&P 500, which is actually also including more like the utilities or the more value-oriented stocks, hasn't been doing so well during this recovery. However, if we are looking at the last month, what has happened here, you actually see that the S&P 500 has been outperforming the tech stocks. So whereas the tech stocks only made about 1% in gains with the close of yesterday, the S&P 500 is actually up 5% or more during the last month. So what we can see here is clearly a shift back from the tech and growth stocks towards the value stocks. And this is what is currently happening in the markets. It's actually a broadening out of the recovery. So the bull market that we are in is now actually coming also to the utilities and the value stocks that have been growing less in the past. And some investors are having the views that the tech stocks have been growing too fast, so thereby they are selling it. There is news from Goldman Sachs that are saying that upon vacancy news, which we actually had yesterday's, we would see a shift from the tech stocks more to the value stocks. So now that growth stocks like NIO, like Tesla have been risen sharply, and also those stocks in the Nasdaq, we see more and more voices saying that, well, we are in a bubble, there is an EV bubble, investors are jumping too much on growth stocks, this will fail and this bubble is going to burst. However, I personally think we're not in a bubble, and I also think that the shift to value stocks is actually dangerous because those stocks are beaten down for a reason. They are actually sometimes the losers out of this crisis, and now a shift back of investors into those stocks will actually mean a shift back of money invested in those companies that are not showing the same growth right now and in real numbers that we're seeing from those more innovative growth stocks like Tesla and NIO. So whereas Tesla and NIO both have not bargain valuations anymore, they are still at the very beginning of their growth for this decade. And so if you have a 5 to 10 years time frame, you will still get some decent returns. And this is actually the reason why I just recently announced on last Friday that I bought more NIO and I bought more Tesla. And I am sitting here at really nice gains from being early in Tesla and being early in NIO. So I actually wouldn't have any reason to invest in those companies, despite the fact that I'm now feeling that they are reaching a new level. And this is actually just getting me more comfortable about what is going to happen with these stocks in the future. So this may not age too well in the short term, but I bought more Tesla at $1,400 a share, and also more NIO yesterday at both $15 when it spiked, but also when it came down 10%, I bought more and picked it up at $13 as well. Because generally what I'm doing with this shift from growth to value is that I'm also having a couple of index funds that are invested in the S&P 500, for instance. So they are invested in those value stocks, and I made nice gains since the recovery of the markets here. However, I am now going to sell off those value stocks because I do think that this shift to value is actually the dangerous parts. And although I do think that the growth stocks may enter a period of less growth for now in the stock prices, and maybe this will take some time until it has been consolidated, what I'm looking to do is actually to shift my money entirely from those value stocks more towards the growth stocks that I understand better. Because I do think that, for instance, the S&P 500 has too many companies in the fund which are stalling, they have no real growth, and they will be the loser of this crisis. So instead, Tesla and NIO, they have made enormous progress, and they have demonstrated it with the earnings call in Q2. And there are even more growth catalysts lining up. We see them on the horizon, but they haven't had yet an effect on the stock price. So for instance, Tesla had a profitable quarter during a pandemic with factory lockdown, while the entire industry is tanking, and Tesla is really moving so fast on each corner with Giga Berlin, Giga Shanghai, Giga Austin, new product launches, Battery Day, S&P 500 inclusion around the corner, announcement of the ride-hailing network service, the new energy business taking off. And I do think people simply do not comprehend the value that is being created there, the speed at which it is occurring, and also not the scale of the innovation that is coming. And the same thing actually goes for NIO. So yesterday's earnings have been a breakthrough moment for NIO. They delivered stunning margins in the midst of a pandemic. Before yesterday, we didn't even know that these margins are possible for the NIO business model. So this is real news, and there was so much news with the earnings and the earnings call yesterday. We heard about the battery as a service, new energy vehicle credits, new NIO models, full order books, increased factory capacity, lots about demand, lower costs, more efficiency, so that the increases in productivity are really just insane, and all this change is really happening under the hood. And I will have to do a new separate video on covering all those impacts of yesterday's earnings actually. And you can believe me that I will do also cover them critically. But for now, there have been just so much positive things about those earnings yesterday that I'm really genuinely positively surprised. I have not anticipated it in that positive way, and this got me really much more comfy with NIO yesterday. And this is also why I'm not looking back to the fact that I bought shares yesterday, sometimes even during the spike. So whenever you hear about this EV bubble and all of the value stocks that are rising and the growth stocks that are maybe cutting back now, and maybe some people are taking profits, I would say just ignore the buzz. These are the companies that are come to stay, and this is the decade in which they will disrupt. Instead, I see Tesla's stock split, for instance, yesterday as good news and a way that retail investors can stay in the game and maybe regard some of those dips as what they actually are. I think they are buying opportunities. And of course, this doesn't matter to you if you're short-term invested. However, I'm always looking long-term, and I do think that there is incredible much more value ahead for Tesla, and the same for NIO. If we look at the week guidance of only 11,500 cars next quarter, I couldn't care less about it, because they have still 150,000 annual capacity to ramp up, and they will do it because they are now showing that they can execute on it, and the demand is there, and that's the important part, not the next quarter's delivery. So this is about the bigger picture, and to round things up, let's quickly look at some other stocks that I'm covering. So Huami, ticker symbol HMI, is up 20% since I've been covering it last, and still it's more than 300% away from my actual target price for 2020. So take a look at the video if you haven't yet. And then we also have Baidu earnings coming up, which I will be interesting to watch whether or not they make the shift from simply being an advertisement and search company more towards a health company. I'm hoping they will announce more on this during the earnings call, and I will surely keep you updated. So with that, let me know down in the comments whether or not you agree with my views. As always, this is not investment advice, this is just my personal opinion and the way that I am trading this and how I'm perceiving the news in the markets. So feel free to voice your own opinion and make up your own mind and decisions. And yeah, with that, see you in the next video. Thank you guys for watching, and a like really goes a very long way. So thank you guys for watching and see you next time. Bye bye.